way. It hit it too. It literally tapped it. Inside of it. It tapped it too. Look at that. Well, stop to break even there. Watch now, price is gonna absolutely tear through this, take profit. Yeah, there's that high right there. Okay, today's gonna be a super quick trade recap on the winning trade that I took today. I took actually a couple trades, but I only want to focus on the one good trade that I took because I only want to teach you guys good concepts in the market. I don't want to teach anything bad, so I'm just gonna skip over the trades that were not as good. I still ended up green on the day because my last trade was so good. I made up for the loss that I had. I went break even on one, loss on one, and then win on the last trade. So let's go over the final trade that I took and exactly why I took it. I'm going to try and keep this very simple, very brief, teach as few concepts as I can, just to keep it as simple as possible for you guys. So the main thing you need to know coming into the market is how the market distributes, which is accumulation, manipulation, distribution. A very simple model happens every day in the market multiple times. All you have to do is align it with timing and macros in the market, and you will find perfect trades. Coming into the market today, I'm always looking at session highs and lows. So with lunch hour here, the lunch hour actually got swept by the first PM macro. So I'm looking for these lunch highs to be sort of a draw on liquidity eventually, which you can see they get hit during Asia session. So they were kind of the lower draw on liquidity, but they were the next draw on liquidity in terms of price delivery. But usually during PM session, after the lunch high or low gets taken out, I'm always looking for the opposite side of the lunch range to be the next draw on liquidity. So that was my primary reason for the bullish draw on liquidity, not to mention all of the high time frame bullish price right now. So price is extremely bullish on the 4 hour and everything. So that's another assistance to my bias. But coming into the trade specifically today, after lunch hour was delivered to and the macro was placed, we had a price run into OTE of the current price delivery range to the sell side. So we can see that price delivered right up into OTE of this range. This was kind of an accumulation, manipulation, distribution backs down to these lows. I was looking for the standard deviation projection of this price delivery from OTE. So if you mark out the top to bottom of the accumulation that happens before price delivered lower, we can see price actually delivered all the way down here to the 3.5 to 4 standard deviation, literally rejecting off the bottom of the zone perfectly. It's exactly what we like to see with standard deviation. So this kind of was another signal that we were bullish because we had fully extended our range here. And also we had created SMT at some previous lows. So a lot of things were pointing bullish, but coming into the final hour of the market, 3 to 4 p.m., we can see that this 315 to 345 macro price pretty much just accumulated. We had some internal highs to target, and then we had this low we put in right before macro started, and price never took out either side of this range. We kind of just chopped sideways, disrespecting imbalances and all that sort of stuff. But as you see, right after the 345 closes, we get a price run all the way down to these pre-macro lows that actually get taken out on ES, but they don't get taken on an NQ. So this creates a bullish SMT, which did turtle soup some internal range liquidity into this 1 minute bullish fair value gap. So this is a turtle soup kind of model. This would almost be a motion model if we had some sort of internal fair value gap here that got inversed. Probably on the 30-second, there was some sort of fair value gap to use as a motion model entry, but I'm comfortable taking this turtle soup because I understand how AMD works in the market and understand that our draw on liquidity, whereas this 5 minute highs right here, there's an unfilled 5 minute fair value gap with 2 equal highs under it, as well as this internal high that price had swept out, or price needed to sweep out because at this point we had equal highs right here and right here. So there's this equal high level and then this equal high level that both need to get manipulated on the buy side. So essentially, as price came down, turtle soup these lows into this 1 minute bullish fair value gap, I'm taking my entry. You can see my entry is a little bit higher towards the top of the fair value gap, but I enter as soon as these lows are swept on ES because that is when the SMT is put in. So my entry was about here. I was protecting the SMT lows that I don't want to see get taken out on NQ. And then I'm simply just targeting this internal high as my break even level because this is a sell side fair value gap right here. This is a SIBI going down. You can see price never actually closed out of it, so it is still a valid SIBI. And this was the most recent swing that reached up into it and was respected. Not to mention it's a pretty large rejection wick. So if you see price come up above this, there's perfectly good reason for price to sell off. So that's why it's our break even. My second two targets were obviously the macro highs at these equal highs accumulation. That's my take profit one at a 2 to 1 risk reward. And then my third runner was all the way up to this this 5 minute fair value gap about almost 3 to 1 risk reward. So as you watched in the sped up version of this trade previously before this, you can see price actually did wick out my TP2. You can see it right here. It literally wicks it. But if you look at where that arrow is, it's actually down here on my first take profit because price was so volatile in these last 10 minutes of the market open that it wicked out my limit order, but I never filled it. So I ended up getting filled here for my like 90% take profit one. And then the last two micros that I had running got stop break even whenever price reached back down into here. But of course, it reached down into this bullish fair value gap, respected it perfectly, came back up to the top here, and ended up filling that order if it was still there. So this is the full trade that I took. It was a 2.85 to 1 risk to reward. That is pretty much all the reasons I took behind it. Just simple AMD turtle soup entry with a real DOL or a real draw on liquidity here. So hopefully this was helpful. Hopefully you guys learned something from this. I'm trying to keep it as simple as possible for you guys to make learning as easy as I can. If this was helpful, drop a like, drop a comment. Make sure you subscribe to my channel for more trade recaps like this, and I hope you all have a good one.